Good morning and welcome to the Australian Stock Reports online morning update for the 22nd of November 2011. Sovereign debt concerns sent another shudder through global markets overnight, with the focus shifting from Europe to the United States. As expected, the failure of the US Debt Supercommittee to reach an agreement on cutting the country's debt triggered major losses on the benchmark indices. The inability of US politicians to address their country's long-term problems created yet more uncertainty for markets, which had already been retreating due to Europe's debt woes. None of the major indices were spared from the overnight rout, with France bearing the brunt of the losses after the country's AAA credit rating was placed under threat by Moody's. The strengthening US dollar also diminished the appeal of commodities, with gold slumping more than 2% and oil dropping for a third consecutive session. Instead, investors sought only the safest of assets, such as the US dollar. Notably, the American debt mess drove US bond yields even lower, which is in stark contrast to the situation in Europe, where markets are actually punishing governments for their fiscal irresponsibility. The SPI was swept up in the overnight sell-off, collapsing more than 90 points from the session's high to a low around 4,100. The index managed to climb off its lows but rolled over once more towards the end of US trading. Our market is on track for a sharply lower start to this morning's session, with SPI futures currently pointing to a 60-point drop on the open.
Get free access to our daily reports and recommendations now. Visit australianstockreport.com.au/try.